Taking a look at the interest rate environment, I want to focus on the 10-year note. 10-year note, big rally today. We saw it up around 122.20. That was the closing range. We saw a high of 122.215. Started the day at the low end of the range at 122.04. So a big rally today in the 10-year note. And with that, yields under pressure. The yields pushing back down to the yearly lows. 2.64 on the yield today. We did see 2.63 earlier this year, but again, pushing down to that low end. And if we break that 2.63 level, I think that you could see a pushback to the 2.55 level pretty quickly. And that was the low end of the range in December. Some of the factors, central banks playing a factor in the price movement in the 10-year. ECB today was the big player, again, announcing a very dovish tone. Again, also shifting their pattern here moving forward by reinitiating what they call TLTROs, or targeted long-term refinancing operations. And that's something that they initiated in 16 and 17 that they felt would help stimulate the economic structure and also be very accommodative. And what that is basically opening up credit to the big banks in Europe for them to borrow at very cheap rates. And again, with the understanding that they're going to put that money to work. They'll not just sit on it, but put it to work. And again, that driving factor is a very accommodative situation for the central banks in Europe, and therefore we're seeing it play out in the repricing of the yields here in the U.S. Another factor that needs to be focused on is the data coming out tomorrow. So data tomorrow, unemployment report, big number, typically a market mover, and again, the expectations are 175 on the non-farm payroll number. The bigger number, I think, is the wage inflation number, and we're seeing that run a little bit higher than it has recently. Expectations for 0.03 on that number, and anything outside of those expectations, I would expect to see the 10-year yields shift dramatically if we see something, an outlier number much larger or much less than that 0.03 average hourly earnings number.